What is going on YouTube? Hayden back making another brand new Crypto TV episode. In today's video, we are going to be looking at XRP, Ethereum, Bitcoin, as well as the S&P 500. Guys, we have a lot to talk about in today's episode. First off, we have to continue from where we left off over the weekend. As you guys know, the weekends usually don't yield much movement or volume, which we clearly saw yesterday and Saturday as well. You can see we've pretty much just consolidated. Now, what we've tracked over the past couple of days was what appeared to be a potential double bottom formation on most of the major cryptocurrencies, as you guys can see. The S&P 500 opens in about 20 minutes here, which will most likely cause rejection, most likely off this resistance level here, but I could be totally wrong. Let's hope that I am wrong. But not only do we have this stuff to talk about with the possibilities of seeing these cryptocurrencies potentially break down and see an even lower level, which would be quite scary if you ask me, but we have this article that is extremely important to discuss for you guys that will really set the bar for the rest of the next couple of weeks here. As you guys can see, this is an article put out by CNBC. Another hot inflation report and the start of earnings season make for a challenging week ahead, which is totally true. There's a lot of very vital, important information coming out this week, which is extremely important for the S&P 500 and how cryptocurrency is going to be performing over the next couple of weeks. It will really set the tone. As you guys can see, just really quick, and then we'll divulge into this a little bit more in a little bit into today's video. But this week, we expect to see consumer inflation data come out for June. And as you guys can see here, and the start of the second quarter earnings season could set the course for markets and result in volatile trading in the week ahead. The June Consumer Price Index on Wednesday is expected to show headline inflation, including food and energy, rising above May's 8.6 level, which is kind of scary and will most likely cause a drop in the S&P and crypto on Wednesday, because people are expecting, especially with gas and stuff, that we're going to see levels higher than 8.6. We're going to maybe see even 9% inflation, which is definitely not a good sign, and is definitely going to see the markets pretty much correct and dump because of that. You can see here the street has not really changed the earnings estimate. Revenue growth has ticked down, margins are compressing, analysts are leaving their estimates unchanged. If there's going to be a readjustment, this is the time to do it. So unless we see some positive news come out, they're expecting to see June's inflation above 8.6%, which is not good. However, though, I don't know if you guys have been paying attention, but gas is starting to fall. I'd say in June we peaked at $5 a gallon, and honestly, I just filled up at the pump and I used Costco, and gas was $4.15 for regular gas, which when I was filling it up, I was like, what the heck is this, $4.15? And every single person at the pump was talking to the workers at the pump saying, how is gas this low? Which is pretty incredible if you ask me. And I know $4.15 is by no means low, but the fact that it's like 75% or 75 cents down from what it was is pretty insane, or 85% down from what it was is pretty insane. So let me know if you guys have seen these fluctuations, or, and I'm in Florida, let me know what the prices of gas are for you, where you're located, and if they've come down as well, because it's extremely important. But with that being said, guys, definitely make sure to smash the like button, turn on post notifications, subscribe, and let's dive into today's episode. So, guys, super quickly, I just wanted to let you guys know my finance channel here that's brand new. We're almost at 1,000 subs. As you guys can see, I dropped a video 4 days ago talking about the car market bubble popping, which it definitely is doing so. And I'm putting out a video this week. I need to start working on the production side, which is going to be talking about the housing bubble popping, especially with rent and mortgages and stuff like that, which is going to be an extremely interesting video. And if you own a house, live in a house, rent, which I'm assuming most of you do, I would definitely recommend watching that video too. It's going to be quite interesting here. And I'll make a video on the inflation and stuff later this week too, because that all comes out this week. But with that being said, definitely make sure to check out this new video here and subscribe to this channel, link down in the description below. But diving into today's video, as you guys can see, for the most part, XRP has pretty much just been consolidating. And yeah, we're at a pretty interesting level. Now, we have made a trade, a very aggressive, moderate to aggressive trade, when we saw prices kind of bounce off the support we closed above, which was the means of a correction to the upside here. We don't really have much of a double bottom it's not as clear on XRP, but there is one. You can see, not what I wanted to do. You can see it's something like this right here, and we were looking more so to come back up to here. This is the neckline we have to break if we want to buy in for a long-term conservative trade. Moderate to aggressive, you could have traded this, but I really, as a beginner or as a conservative trader, do not like to trade inside these channels because of how aggressive and crazy the markets can be. And as you guys can see, we immediately reversed right back down, and a lot of people could have gotten burned had we have traded something like this. So that's why I'm sticking this out. We'll probably get the answer we're looking for this week, especially with CPI data, as well as the GDP second quarter coming out. If we have 2 quarters of negative GDP, which will be determined probably this week, we'll know that the markets are dumping, and we'll know that we have been in a recession, which, it has its biases. It's a good thing, but it's also a bad thing. So we'll see. But that also means, prices might correct lower than that. So keep your eyes peeled. Really, it's a focus on, are we breaking and closing a daily candle below 30 cents? Are we going to close a daily candle above 38 cents? Within here, it's not worth trading as a beginner or conservative trader. Now, looking at Ethereum, it's a similar path. You can see here we got rejected off what appears to be the double bottom, a formation of a double bottom to say the least. We got rejected off neckline, which is not a good thing, but it could, create a potential triple bottom formation here, which if, again, we need a break neckline, could then rally up higher. And just for future reference now, I'm going to just draw a horizontal line at neckline that we really need a breakthrough in order for us to trade. So really, I don't recommend trading anything inside of this. There's a good chance you're going to get wrecked. However, moderate to aggressive traders, with the rejection off here, there's a chance we could continue to stem lower, but that's a risk you guys have to be willing to take. For the most part, I expect to see consolidation into here until the S&P 500 opens and we start to see some movement throughout this week, and when those 2 very important numbers come out for CPI data as well as for the GDP. But until then, consolidation in here. Same advice I gave for XRP is with Ethereum. If we break through 1250, we know we can long this. If we close at about anything above 1250, 1280, 1300, we can buy in long with expectations of seeing a run. We close below major support at $1,000. We're going to short this to the downside very quickly. And the same thing applies itself with Bitcoin, also seeing what appears to be a neckline and a double bottom, drawing this horizontal line just for reference. It's tough. We can either map it out like this, which is pretty low. I'm going to set the bar a little higher for us. I'd say if we can close above 22.5, this resistance here, I know the neckline's lower, but just giving us some conservative leeway here, this is what we're dealing with. So once again, trading inside of here is super risky and super aggressive, especially with this, downtrend here. We'll probably, fill in the gap like this. What we're looking for is closure above 22.5 or 22.4 and change, or closing below 19,000. We do one of the 2 things here. We can buy in and either long to the moving average or short to about 10K or 15K, which we can obviously take advantage of on Bityard. Link for Bityard is down in the description below. Make sure when you do sign up, you click on Get Free Crypto right there. You can earn as a sign-up bonus. Bityard is the #1 cryptocurrency leveraging exchange that I like to use here on the channel, so definitely make sure to check that out. But moving forward on the article that I feel like is the most important to talk about here, in regards to inflation, you can see consumer inflation data and the start of the second quarter earnings season could be 2 catalysts that make a bumpy ride in markets in the next week. In the weeks ahead, PepsiCo earnings, Delta Airlines. So we know PepsiCo probably, I don't know. Honestly, this is a hit or miss here. And these earnings will all come out this week, so we'll know how these are going to be moving. A cluster of inflation reports could affect markets since they help set the tone for how aggressive the Feds will have to be in the battle to calm inflation. So that's very true. If we see inflation for June, June even higher, which we might see because of gas, because gas peaked and hit a top. But I don't know, because we peaked and we're starting to see gas come down, they might have said, okay, this might be it. But they could raise inflation rates once again even higher, which would not be good. But people are assuming that June CPI data, economists expect it could be hotter than May's 8.6. And they also report that the markets could, move markets the most here. What I want to show you guys too, and as you guys can see though, even though gas was as high as 122 a gallon or a barrel, they're now just under 105. So they are coming down in July. So July will definitely be lower than the previous months ahead. You can see the economy ended 372,000 more jobs, 120,000 more than expected, which is awesome. So things are definitely doing well. The S&P 500 is continuing to scale lower, but we kind of found a bottom and have started to climb back up in June, which is definitely also a very good sign here. So there's a lot of positive things coming. You know, people are adding more jobs. We're seeing the S&P swing up, but gas went up too. But since then, we're also seeing gas come back down and rents also coming back down, which could be a sign that we're balancing out. And that's a very good thing. So the key question is, when will inflation peak, as it has already continued to flare higher, much longer than the Fed initially anticipated? So if we don't get a lower CPI data in June, I can almost bet I'd be a bet. If I was a betting guy, I bet July will be, this month will be a little bit lower, depending on how we trade, will be a little bit lower than June moving forward. And as you guys can see, second quarter earnings for the S&P are expected to grow by 5.7%, which is good. So that means we have July, August, and September, I believe. And that's the second quarter. So first quarter was January, February, March. Now we have April, May, June was second quarter. I apologize. And that says second quarter earnings are expected to grow by 5.7%. I think that's what they're referencing. And then we have January, February, March, April, May, June. Now we have July, August, September. That's third quarter. And then October, November, December is fourth. So the earnings are going to come out. The average for the S&P, and they're expecting it to be a growth of 5.7, which makes sense considering we went up. However, they're also expecting third and fourth quarter have been moving down slightly, but are still higher. That means they're expecting 10.9% and 10.5%. So in total, it'll be up 25% from its bottom, which is definitely a good sign. So on the bottom here, which is interesting too, it's very interesting. The bottoms here, we're already up 7%. If we move this up 25%, FYI, that's where it puts us by the end of the year with these earnings, which is pretty insane. And it definitely makes me feel better, though, to see that. The end of the year is right here. So by the end of the year, they're expecting what I would expect to be trading right here. They're expecting it to be up there. So I would expect to see a 12.6% gain. They're expecting a 25 to 26% gain here, which would be insane because we'd be extremely overbought once again, but it's definitely a good sign that we could be opening up something new to the S&P 500, to the economy. So I'm excited that they're still expecting the second, third, and fourth quarter to be positives. Like they're expecting the S&P to make some positive gains, which is expected and anticipated. So this is very exciting to me. And then moving forward here, you can see these are the information. We have the U.S. Treasury note auction, which is insane. PepsiCo. We have June CPI data coming out. Lots and lots and lots of stuff coming out this week, which is insane here. But this is the main one we're focusing at. 8:30 a.m. June CPI. Big stuff to talk about. But otherwise, that's going to wrap up today's video. Definitely make sure to smash the like button, turn on post notifications, subscribe to my channel and my new one if you haven't already. And I'll see you in tomorrow's video. Peace.